Hello and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. South Korea to authorize institutions to trade crypto donations starting 2025. Ether surges 3.5% as CBOE and 21 shares aim to introduce ETH staking in spot ETF. New York Senator proposes crypto task force to investigate industry impact. Metaplanet raises for billion Japanese yen in zero-interest bonds to expand Bitcoin holdings. AI-driven crypto scams poised for record surge in 2025, nalysis report. South Korea to authorize institutions to trade crypto donations starting 2025. In a significant move towards crypto integration, South Korea's Financial Services Commission, FSC, has announced that institutions will be permitted to trade digital asset donations from the second half of 2025. This landmark decision is part of a broader effort to enhance the nation's cryptocurrency market and expand financial services for digital assets. Pilot program to expand institutional access to crypto trading. According to the FSC's announcement on February 13, a pilot program will launch in the first half of 2025, enabling 3,500 corporations and professional investors to open real-name accounts on cryptocurrency exchanges. This initiative aims to foster a more transparent and secure trading environment. Notably, these accounts will be limited to institutional investors with risk management capabilities, as the FSC prepares to test investment and financial services accounts. Charities and universities to benefit from crypto sales. Starting from the second half of 2025, charities and universities will be allowed to sell their cryptocurrency donations. This adjustment is expected to help nonprofit organizations access liquidity more efficiently, supporting their philanthropic missions. Regulatory shift from 2017 restrictions. The new regulations signify a departure from the 2017 policy that restricted institutional involvement in virtual asset trading due to concerns over speculation and money laundering. By opening the market to institutions, the FSC underscores its commitment to responsible crypto adoption and market growth. Crypto exchanges to gain selling privileges. In addition to expanding institutional participation, the FSC will permit cryptocurrency exchanges to sell crypto holdings acquired through user-generated fees. This measure is anticipated to enhance the operational capacity of exchanges and streamline their financial practices. Impact on the South Korean crypto market. The announcement has sparked optimism within the crypto community, signaling the government's willingness to balance regulatory control with market innovation. Analysts predict increased institutional participation will boost liquidity, stabilize the market, and attract global investors. Is South Korea's institutional crypto adoption a sign of global regulatory shift? Ether surges 3.5% as CBOE and 21 shares aim to introduce ETH staking in spot ETF. In a notable development for the crypto market, Ether's price soared by 3.5% following news that asset manager 21 shares intends to incorporate staking into its spot Ether ETF. According to CBOE BZX Exchange's February 12 filing with the U.S. Securities and Exchange Commission, SEC, the proposal could redefine the appeal of Ether exchange-traded funds, ETFs, for investors. 21 shares plans ETH staking to boost ETF returns. The proposed initiative will allow 21 shares to periodically stake a portion of the trust's Ether through reliable providers. If approved, It would mark the first spot Ether ETF to offer staking, enabling investors to gain exposure to staking rewards. The filing emphasizes that 21 shares will ensure ample liquidity for redemptions and will not promote staking services or promise specific returns. Impact on institutional investors and the crypto market. Analysts predict that integrating staking within the ETF will significantly increase its appeal to institutional investors, a segment where Ether ETFs currently trail behind their Bitcoin counterparts. Prominent trader Ash Crypto described the move as a game-changer for Ethereum, highlighting its potential to broaden institutional engagement. Ethereum community and ETF providers rally behind staking. The proposal follows Ethereum co-founder Joe Lubin's recent comments indicating that ETF providers are actively working toward staking approval for spot Ether ETFs. The consensus within the crypto community suggests that Ether ETFs have lagged behind Bitcoin ETFs partly due to uncertainty around ETH's unique value proposition. Will Ether staking spark a new wave of institutional adoption for crypto ETFs? New York Senator proposes crypto task force to investigate industry impact. In a major step toward understanding the cryptocurrency landscape, New York State Senator James Sanders Jr. has introduced the New York State Cryptocurrency and Blockchain Study Act. Announced on February 12, the bill seeks to form a 17-member task force to evaluate the effects of cryptocurrencies on the state's economy, regulations, and environment. Task force to assess crypto trading and regulatory impact. The proposed task force will examine key areas, including the number of digital currencies traded, the count of crypto exchanges operating in New York, and the impact of crypto transactions on state and local tax revenue. Additionally, the task force will review the environmental implications of crypto mining and compare New York's regulations with those of other jurisdictions. Legislative path and reporting timeline. If enacted, the task force members will be appointed within 90 days, with a comprehensive report due by December 15, 2027. The report will offer legislative recommendations aimed at enhancing transparency, security, consumer protection, and addressing long-term impacts of digital currencies. Challenges facing crypto businesses in New York. Despite New York's status as a key hub for crypto activity, its regulatory framework, specifically the 2015 BitLicense program, has faced criticism. Industry leaders and pro-crypto Mayor Eric Adams argue that high licensing fees and strict compliance requirements hinder business growth. National crypto legislative trends. New York is not alone in exploring crypto regulations. Over 20 U.S. states are reviewing cryptocurrency-related bills, with Arizona and Utah making notable progress in advancing legislation. According to Bitcoin Reserve Monitor, if these initiatives were enacted nationwide, they could drive an estimated $23 billion in demand for Bitcoin. Growing institutional interest in Bitcoin. Meanwhile, institutional interest in Bitcoin continues to rise, with over 100 public entities accumulating the asset as a hedge against inflation, according to BitcoinTreasuries.net. Could New York's crypto task force shape the future of U.S. digital asset regulation? Metaplanet raises for billion Japanese yen in zero-interest bonds to expand Bitcoin holdings. Metaplanet, known as the MicroStrategy of Asia, has secured for billion Japanese yen, $26.1 million, through zero-interest bonds to fuel its Bitcoin acquisition strategy, the company announced on February 12 via X. The bonds, which are unsecured and unguaranteed, are backed by investment manager EVO Fund, allowing Metaplanet to expand its Bitcoin portfolio without incurring interest payments. Bold Bitcoin acquisition targets set for 2025 and 2026. Metaplanet aims to acquire 10,000 BTC by Q4 2025, an investment estimated at $957 million at current prices. By the end of 2026, the company plans to increase its Bitcoin holdings to 21,000 BTC, valued at approximately $2 billion. As of January 28, Metaplanet held around 1,762 BTC, signaling its aggressive acquisition approach. Financial strategy and economic motivation. The fundraising involves a reduction in yen allocation for Bitcoin purchases from 111.3 billion yen, $723 million, to 107.3 billion yen, $701 million. Metaplanet attributes its Bitcoin strategy to Japan's economic challenges, including high debt levels, prolonged negative interest rates, and yen depreciation. Explosive market growth and investor confidence. Metaplanet's stock has surged by 5,250% over the past year, driven by a 500% increase in shareholders, with 50,000 new investors participating. Its market capitalization has skyrocketed by 11,800%, reflecting strong market confidence in its Bitcoin-centric strategy. Global trend toward Bitcoin treasuries. The trend of holding Bitcoin as a hedge against inflation is gaining momentum globally. Companies like MicroStrategy and Semler Scientific have experienced significant stock growth following their BTC acquisitions. Meanwhile, 16 U.S. states, including Texas, Kentucky, and Missouri, are exploring Bitcoin investments, and the U.S. federal government is considering a digital asset reserve. Could Metaplanet's aggressive Bitcoin strategy inspire more global companies to adopt crypto reserves? AI-driven crypto scams poised for record surge in 2025, Chainalysis report. Crypto scams are set to reach unprecedented levels in 2025, driven by advancements in generative AI that are making fraudulent schemes more sophisticated and scalable, according to blockchain analytics firm Chainalysis. AI-enabled scams fueling crypto fraud surge. In its February 13 Crypto Scam Revenue 2024 report, Chainalysis highlighted that generative AI is enabling scammers to create synthetic identities, realistic websites, and fake listings, making scams harder to detect. The report revealed that crypto scam revenue hit $9.9 billion in 2024, with projections to exceed $12 billion as more fraudulent addresses are identified. Shortfalls in identity verification and rising AI-driven fraud. The study found that 85% of scams involved fully verified accounts, indicating that traditional identity controls are failing in the face of AI-powered fraud. The $150 million fraud detection tool recently acquired by Chainalysis identified that AI service vendors' revenue from scam-related operations surged by 1,900% from 2021 to 2024. Economic impact of AI scams. Deloitte's Center for Financial Services projects that generative AI and deepfake-related scams could cost the U.S. economy $40 billion by 2027. Meanwhile, the U.S. FBI has warned that scammers are increasingly using AI to target cryptocurrency investors. Rise of illicit marketplaces and AI services. Chainalysis flagged Hua1 Guarantee, a peer-to-peer marketplace, for facilitating scam operations under the cover of legitimate services. Between 2021 and 2024, Guione's revenue from scam infrastructure providers soared exponentially, signaling the deepening role of AI in fraud networks. Crypto crime trends and increasing illicit volumes. Despite a decline in the overall share of illicit crypto transactions, nalysis reports that total illicit crypto volumes may have reached $51 billion in 2024. Annual scam activity has grown by 24% on average since 2020, with AI-powered schemes driving the increase. Will AI-powered scams push regulators to introduce stricter crypto security measures?